Good afternoon, everybody, and I'd like to welcome you to Barchart's weekly educational webinar. Whether you're joining us for the very first time or you've attended a session before, our hope today is that we're going to show you how to best use some of the pages and tools that we provide on Barchart.com. My name's Jane Baker, and if you've attended one of our previous sessions, you know that I'm usually the moderator. I'm kind of sitting in the background answering some of your questions. But today we're having a very special session. I'm going to be bringing Jim Van Meerten on in a moment, and we are going to be talking all about Barchart's Chart of the Day, which is a free daily newsletter that we offer to whether you are a subscriber to Barchart or you're just one of our site visitors, you are free to get this daily newsletter. And like I said, I'm going to be hosting this session with Jim Van Meerten, who selects and writes our Chart of the Day newsletter. And we're going to hear directly from Jim how he searches for these stocks, how he selects them, and how he goes about analyzing all of the different stocks that are out there available to choose from and comes up with this one daily pick. So I'd like to welcome Jim to our session today. Jim, hello, how are you?
Good morning, I'm doing great.
Good, glad to hear that. I'm really looking forward to having you share with our audience some of the tips and strategies that you use when you look at the Barchart site and find these stocks to pick. Before we go any further, I want to talk about the disclaimer that you see on your screen. As with all of our webinars, you do need to understand that this is educational in nature, and in no way should you consider what we're presenting to be as an investment advice. The Chart of the Day newsletter and what we're going to go through today, it's really designed to be a starting point for you to look at different trading ideas to possibly look at, for your own trading purposes. So with that said, I am going to present our guest educator, Jim Van Meerten. We've already said hello to Jim. But Jim, I'd like you to maybe take us through a little bit of your background, and I want our audience to understand a little bit more about why you are our subject matter expert today.
Okay. I've actually been investing for a little over 50 years. I bought my first mutual fund back in September of 1970. My background in education, I first started out as an accounting major at Berry College, Accounting and Business Administration. Then a few years later, I was doing some post-baccalaureate work at Georgia State University in quantitative math and analysis, because as an accounting student, you don't have a lot of time for a lot of electives. So I needed to get more of a background in quantitative math and analysis. I went on later to get my law degree from Woodrow Wilson College of Law in Atlanta and practiced law. And then later on, actually when I was around 50, I got my graduate studies in education at University of North Carolina in Charlotte. I started out working for a CPA firm down in Fort Lauderdale in 1970 when I came out of basic training from the National Guard, and then moved up to Atlanta, where I was actually director of accounting services for, it was at that time called Retail Credit, later became known as Equifax, and was also internal auditor at several other places. I passed the Georgia CPA exam, the Certified Internal Auditor exam, Georgia Bar exam, and later on, when I got into financial services at A.G. Edwards, Bank of America, and Wells Fargo, I had, of course, my Series 6. Then later on, my supervisory principal license in Series 24, and then office manager 910. And at both of those, I was supervisory principal and later on a compliance officer at Wells Fargo Securities. I retired around 10 years ago, and the reason I got involved sort of with Barchart is that when you work for a brokerage firm, you're highly restricted on your stock trading. So you mainly buy mutual funds and exchange traded funds. When I retired and could then operate my own portfolio, I decided I wanted to find out if I was really qualified to do that. So I went on Forbes magazine, and they had Best of the Webs. And the two things I noticed was there was a trading simulation program called Marketocracy, and where you compete against other people. And then there was also a great data service called Barchart. So I was used to always using things like Trendline and Value Line. I started using Barchart and found that, boy, they had a lot of things that I could manipulate around. Some friends of mine came in and said, you ought to enter some of these bigger contests. So there was a nice one that was done on the internet with MSN's Money Central, Marketocracy, Investor Place Media, and Motley Fool, which were, four pretty good sites. So I entered the contest, and I was winning it when a guy called me up and said, Jim, you can't win this contest. And I said, well, why can't I? He said, because you're not blogging. And I said, what? This is 11 years ago now. And I said, what the heck is blogging? So I went and got Blogging for Dummies, learned how to blog, and won the contest. Later on, then MSN Money Central decided they'd take that amateur who won their contest and put them against 10 professional hedge fund managers and mutual fund managers. I'd like to say I won that, but I came in third place. And then
third is good.
Yeah, third is good. And so they started flying me around the country to the different, you might know the money shows are all over the country. And they fly me out to Las Vegas and Orlando and all that to speak at the money shows. And later on, then I was invited by Marketocracy to manage a portfolio for them. And then invited by Barchart, since they noted that I was doing a lot of blogging on Seeking Alpha. And then Barchart invited me to begin blogging about how I was using their tools. And about 5 years ago, they asked me to do Chart of the Day. Now, I'd like to go into how the Chart of the Day evolved when I first took it over, because I was using mainly three good, I would call them watch lists that Barchart has. And if you'll click on the stock tab, the three of them were the top 100 stocks.
Which I'm showing right now.
Now, these are the top 100 stocks are the ones that have the highest weighted alpha. Now, what's good about the weighted alpha is it kind of ranks all the stocks against each other. And it's weighted, so it's really current for the last 6 months. So what the weighted alpha tells you is how much has this stock really moved in the last 6 months compared to all the other stocks. What it doesn't tell me, though, and its weakness is it doesn't tell me if it's consistent or not.
Okay.
So then I started using the new highs, and the new high was a good one, and I changed mine to be the all-time new high instead of the 1 month new high.
Okay.
And again, this one had a good thing because it was telling me, boy, these stocks are each day are hitting new highs, but it doesn't tell me consistency. So I went down then and I used the the top stocks to own. Now the top stocks to own tells me more about consistency because it's the highest rated opinion, which basically tells me that these stocks are trading against all their moving averages, including some of the I'll call them first derivative things that Barchart has, like putting the 50-day moving average against the 100 or the 200-day moving average and using those. So I kept going back and forth between those three different lists and getting my stocks there by looking at them and using my flip chart. One day I'm sitting there thinking, one day I was there. Oh, okay.
No, I was going to say I've got a couple questions from users. They want us to explain a little bit more about weighted alpha, what exactly weighted alpha is.
Okay.
And really is it
alpha is nothing more than if you understand a weighted moving average, then a weighted alpha, if you look at the first column, you see weighted alpha is 1600. And if you go to the last column, all the way to the end, the change is really 4,300 for the year. What the weighted alpha does is it gives the first day of last year a weighting of 1, the second day a weighting of 2, 3, 4, till you get to the yesterday, which is the weighted alpha of 365. So it's weighting it in such a manner that the sweet spot is less than 6 months. So it's the current movement of the stock.
right.
Now,
just in case anybody needs additional information, I clicked open the help over here on the page, and there's a pretty lengthy explanation about weighted alpha and how Barchart weighs the more recent activity in our calculation. Okay.
And I think using weighted data is very good, because the data that we normally see in Barchart is data within the first year. But weighted alpha takes that data for the year and weights it to the current, giving the current momentum heavier. Same thing happens in the top stocks to own. There are Barchart's opinion indicators are short-term, medium-term, and long-term, and they give the short-term a heavier weighting than the long-term. So again, we're weighted more toward the last 6 months.
Okay, and if anybody is questioning more about the opinion, Barchart Opinion, we have run a few webinars recently that you can find on our webinar archive page that I would encourage you to go and listen to those so you get a better understanding of that. Okay,
so one day I'm sitting there drinking some scotch and saying, you know, I remember back in Introduction to Algebra 101, they talked about these little Venn diagrams. And it was basically taking things that are in 3 different subsets and finding out which one are common to all 3 of them. And so I said, well, how do I do that? And then I came across the Barchart screeners. And we're not going to go into how to create a screener or the custom views of the charts at this time, but because there are webinars for that purpose. But what I found out was that I could take the screener and I could say, okay, I want to find out first. There was people writing in saying, you know, Jim, we can't really trade your recommendations because only 100 shares of that trade a day. So I changed it and I said, okay, I'm going to limit it to all those stocks that have a market capitalization of over 100 million, excuse me. So where Barchart has maybe 6,000 to 7,000 stocks in their database, now this puts it up to about the biggest 2,800. So I did that. Then I said, well, I want to make sure that these stocks have consistent movement. So I'm going to choose I want only those that are rated an opinion of 100% or more. And to do that, I've of course picked 99. It has to be greater than 99, which is 100. And then I want to find stocks that are above average in their weighted alpha. So I looked at the S&P 500. At the time I started this, the S&P 500 was at about 25. Today, the weighted alpha of it is 48%. So basically, I said to get above average, if the average is 48%, then I want stocks that are twice that. So I picked 100, and as my weighted alpha.
Okay, then, so let's kind of recap this here. So when you first started, you were looking at 3 different reports on Barchart, the top 100 stocks.
And I wanted to find which stocks were on all 3 lists.
Right. So let's talk about the tools that you decided to use that you find on Barchart.com.
Okay. first off, you have to have a way to monitor your data. And I said, well, what is the information I need to know every day when I click on the bar chart? Okay, first I want to know the symbol, the name, and the last price. Then, because I want to know, is it moving now, I want to know the number of new highs in the last month. Barchart has a proprietary tool called the Trend Spotter. Now, it's hard to explain the Trend Spotter because it's sort of a secret juice. It's a proprietary product of Barchart. They don't publish what all is in it, but basically, the Trend Spotter gives you the current momentum using data between the current day and probably 50 days out. So it's a very current momentum indicator. Barchart Opinion is a weighted opinion using data over the past year, but weighted heavily toward the current quarter. Weighted Alpha, again, is using data for the entire year, but weighted heavily into the last half of the year. Of course, the 100-day moving average, when you're talking about a moving average, you're really looking at what the price was about 50 days ago. We're using 100 days, but we're using the moving average, okay? So it's using that data and averaging the data for the last 100 days. Then I wanted to also look at the momentum in the current month. What was percentage change? What was the 3-month percentage change? And the 52-week percentage change. Then the last column that I use is the percentage from its 52-week high. And I use that as a very valuable tool to tell me how close is that stock to making its next new high. If it's 10% below if you'll bring up the
right, I'm going to take everybody into the custom view. So
okay.
So this is the first tool that you decided to use on Barchart. And
Yes.
I've already got Jim's custom view created over here. And these are all of the columns that we just looked at over here. So you just pulled all the data that you found on those 3 reports that you wanted to pull together, and you created a custom view.
Yeah, and let me show you how this custom view kind of works. If you'll bring up the under stocks, just bring up the NASDAQ 100.
Okay, I'm going to go to the
We'll
NASDAQ
use this. Just picture the NASDAQ 100 as being your portfolio. Okay, now click down instead of the main view, bring up my view. Now you can see I've got all the data on the all the stocks in the NASDAQ 100. If I want to see how close is one of these stocks to make a new high, I go to the 52-week percentage of new high, click on it, and you can see Texas Instrument is very close to making another new high. All those in there. Let's do an inverse on that. And you can see Zoom is almost 50% off its previous new high. So it's not one that I'm looking at for current momentum. Same thing with Pennington and Splunk. And if you look, it's kind of funny that all these stocks that are way from their new high, look at the 1-month change. They're also the ones that are going down recently. Right. Look at the Barchart opinions. So the more red you see on your screen, that's what I like about the bar chart. Green means go and red means stop. and so I'm looking for green. So let's click back on that 52-week high. Let's sort them again. Look at this now. Our list is green, almost all green. I'm not saying that you should buy any one of these individual stocks, but if I were going to buy 10 stocks in my portfolio, I'd rather have 10 stocks that were all green than 10 stocks that were all red. And so using these custom views allows you to manipulate your data and find out which of these things are important to you. What am I looking for? Current if I want to look and see what is currently moving today, click on that 1 month number of new highs. And you can see, look at this, American Electric Power, 14 out of the last 20 trading days, they've hit new highs. Gene, now, do you think this is an appropriate time to go to the chart?
Sure. Well, let's talk about the next set of tools that you use. You built 3 chart templates, and we're going to show our audience in just a moment the 3 templates that, well, we'll go to the templates, but let's talk through the 3 that you like to use in your analysis.
These are 3 alternate, each one has some different information on it. The first one is, well, what I call it's not the current one we're using in chart today, it's one we used a while back. It's nothing more than moving averages, the price, moving averages, and the trend spotter. The second one is a golden cross. Now, the golden cross is a long-term trend indicator that a lot of long-term traders like to use. We're looking not only at the current price and the trend spotter, but we're looking at how the 50 and 200-day moving averages cross each other. And they call it the golden cross because those people that want to buy a stock and hold it for a long time and take out all the little noise that's happening on a day-to-day basis, they use the golden cross, because when the 50-day moving average is above the 200-day moving average, they tend to buy. And then when that 50-day moving average goes below the 200-day moving average, they either sell or sell short.
Okay.
Now, the one that I'm using currently is the turtle channel. And the turtle channel has some advantages over the other ones in that it's looking, you can set the turtle channel to be anything you want.
Yeah, now I'm going to take everybody to that chart template, and let's pull up your turtle channel template. And by the way, a lot of people are asking me, can we share your custom view, your chart templates? I'm going to show you toward the end of the webinar where we're going to be able to provide that information for you. So just hold on to the end of the webinar on that one. All right, so we're looking at your chart template, the turtle channel.
So this is the template where you fill in all the things that you want to see on it.
Right.
Gene, it's probably better if we actually go to the chart itself, because then they can visualize what the end product is.
Okay, sure.
So let's just take that again. Go back to the
NASDAQ.
NASDAQ 100.
Sure. And
go to my custom view.
Right. You like to use flip charts, and yes, that's where these 3 templates come in.
Why. Now, what I want to do, Gene, is click on that number of new highs again, because we've already got everything else. Now I want to find the current one. Now let's go to the flip chart and see what this turtle channel looks like.
Okay, so I've already preloaded the turtle channel template over here.
Okay, now I'm a visual person, so I like to see the turtle channel. So what this one here is telling me is that this stock is a recovery stock. And the reason I see that is the top green line is the last new high in the last 60 days. The bottom one is kind of the floor, and it tells me the lowest price this is traded in the last 60 days. I've added in the 100-day moving average just sort of to cut out all the noise for you, and I've added the turtle, trend spotter. And of course, when the trend spotter is green, we like it. When the trend spotter is red, that means that it's a sell point. And so what I'm looking at right now is that this stock was higher and is about to reverse itself. Okay, because you see the new highs came down, and at a point it reversed itself. Let's click to the next stock. Again, this is one of those that is reversing itself also. So you've seen that it's coming off that new high, the new low. Okay, it's no longer going down any, and it appears that it's starting to come up. It has not hit yet its trend spotter. So let's click on another one. Okay. Now, what we did here was we just took a random portfolio. Okay, a random portfolio of the NASDAQ 100 stocks and went back into them. Now, this is a stock here today that I'd look at, consider buying, and the reason why is look at the new highs that it's hitting. And look at the 100-day moving average. It's all coming up. And look at the trend spotter. It's all green.
All right, I just want to point out, because we do have questions, people are asking, how do you read trend spotter? So when you see trend spotter showing red dots, like right over here, that's indicating a sell position.
A sell position, and when it's green, you might consider those resistance and support lines.
Okay.
When you've got a red line above the price, it's a resistance. When you've got a green line below the price, it's sort of a support line.
And right over here in this area, I have both a red and a green.
That will give you a hold signal. In other words, we don't know which way it's going to go from here on out, so we've got a hold signal. Now, the reason I wanted to go through here is this is just a random portfolio of stocks. I'd like to not have a random portfolio. And so to do that, I came up with the screener. And then again, the screener is those stocks that are over 100 million in market cap, so that I get these small stocks out that you really can't trade. Momentum, I want the highest weighted alpha. I want a consistency of momentum using the Barchart Opinion. I want the number of new highs and visualization for your using your favorite chart. So if we can go to the screener,
which is right over here.
Okay.
Now again, I have preloaded on my account here your 3 different criteria.
Sure. And then let's go ahead and click on, now again, it's a market cap, a high market cap, high weighted alpha, and the highest opinion.
All right. Okay. And I do want to also point out, you had mentioned to me that you only look at the major exchanges.
I look at the major exchanges, and the reason why is because I'm a very big believer in stop losses. And you can't put stop losses on over-the-counter stocks or anything like that. Now, again, we see that out of the 2,800 stocks, these are the top 642 according to my screener. Let's go to my custom view. And let's sort them again for the most highs in the, and again, there's 20 trading sessions in a month. So these are 16 out of 20. Now let's go to the flip chart, and you'll see a big difference between what we saw when we just used a random portfolio.
Okay.
Okay, now here we've got a stock, AutoZone. It's hitting a brand new high. Now, what I want to show you is, you see that little cap that's on top of the price today?
Right there. There's also a little one over here.
Right, and what those two mean is that's the lowest point and that's the highest point. So today that stock is hitting a brand new high. Okay, and if you can notice that not only has it hit a brand new high, but did you see the way the trend spotter has changed from a resistance to a support?
Right here, yeah.
Yeah, it's changed on that day. Not only that, but do you notice that it's trading above its 100-day moving average? And the low part, the low has hit a higher new low, if that makes any sense.
Right, your turtle channel has moved up.
So I've got my whole turtle channel's moving up. I've got support with the trend spotter. I've got a stock trading above its 100-day moving average. Let's click on the next one and just see.
So this is the routine that you go through every day when you decide to look for what chart you're going to feature in the newsletter, correct?
We use a 3-step process. First, I screen all the stocks to get the best ones, the ones that are slightly above average. Okay. Then I go to my custom view so I can sort my data, and then I go to my chart so I can visualize what's going on. Now, this stock here, notice that I can see it's falling off of its new high. Because see, The new high was really 3 or 4 days ago.
Right.
Okay, it's a good stock. It has all the others, but it's not hitting a new high today. The next stock I know is going to be a flat stock. It's been in this while, and it's because it's going to be acquired. So you could see the day they announced the acquisition of that stock, its stock didn't move. Okay.
So you've seen this one in your daily screen before.
This is why I like to visualize it, because if I was just looking at pure data, I'd probably say, oh, gee, that's the third best stock in the portfolio. But then when I look at the chart, I say, oh, now I see what's wrong here. It's flattened out, not adding anything new. All
so
right.
Analyzing the data with these visual tools is very important to you.
To me, it is. I'm a visual person.
Yeah, you also mentioned you're a momentum trader, so you're looking for specific patterns.
You remember back in Algebra 1 when you'd graphed and you had the XY, and the bottom left-hand side was those that were all negative, and the upper right-hand side were those were all positive. So that's basically what I'm doing, is putting all the stocks in a matrix like that and picking the ones that are in the positive. I've got positive momentum. I've got positive consistency. I've got positive current momentum. And this allows me to visualize it. Let's take the next stock.
Sure.
Again, you can see, boy, this one hit a brand new high today. And the lows are new higher lows. And about 2 weeks ago, it started hitting new highs almost every day. And it's hit a new high today. I've got my trend line that tells me I've got pretty current momentum. I've got my 100-day moving average telling me that this is one has consistently been moving up for a good period of time.
Okay,
So
go ahead.
I'm hoping that makes sense of taking the stocks and saying, I've got this database of 3,000 stocks. I want to narrow it down with my screener. After I've narrowed it down with my screener, I want to manipulate the data and look for those attributes that I want to have in my portfolio. And then lastly, after I've manipulated them and got them in the order I want, then I go to my flip chart and I'm able to see the current momentum. Now let's go ahead, Gene, and change this to the chart of the day, the moving average one. And let's start at the beginning again and just see another way to look at the stocks. Okay, that turtle channel gave me a good one. Here's another way to look at the stocks.
So
again,
we've got multiple moving averages on here.
And look at this, all the moving averages. The short-term moving average, in other words, the 20-day moving average is above the 50, is above the 100, is above the 2-day. So this is a stock that has very good consistency. And if you can see my trend spotter in there, is giving me a positive signal. It's just another way to visualize the stock, where the other one had a turtle channel. This one has moving averages. And if I've got stock that is trading above all its moving averages, I like that one. Now, you remember I was a little bit hesitant about the next stock, looking at the turtle channel, because it was off its new high. And again, this chart almost shows me the same thing, in that look at how it's come off of a high and is now down and crossing its 20-day moving average.
Right here.
Yes, just another way to look at the stocks using moving averages.
So again, this would be one that you wouldn't necessarily want to pick for your chart of the day newsletter, just because it's nearing this 20-day.
Coming off of its highs. It's coming off. And then you can see, again, this stock's flattened out, and all the moving averages showing that. This is just an alternate chart to look at. Again, I've got good support here. All my moving averages are each one is above the other. And look at my trend line. Remember I said that the trend spotter normally follows between the 50 and the 20-day moving average. It's almost following exactly the 20-day moving average with this stock. And again, we've got that new high point. You see the little cap on today's current price.
Right there. I do have a question from one of our audience members. They're asking if there's any significance on the placement of the trend spotter dot. You'll see, like right here, it's right at the bottom of the bar, whereas over here we're far off of the bar. Is there anything that you want to talk about there as far as the placement of your trend spotter?
I like to see a stock and a trend spotter that is almost like on a slope of 1-to-1. Now you can see this stock here. If I take the point 6 months ago at the beginning of this chart to today, I can draw a line almost that way. What it tells me is if a stock gets way above its trend spotter and its 20-day moving average, it might be moving a little too fast.
Okay.
But what I want to see is that consistency. Now let's look at SAC at the next one. And you can see this one has a lot more consistency. You see the way it's moving? It's almost hitting new highs every day. That 20-day moving average is moving up there with the trend spotter. And the only negative thing I have is it hit its new high 3 days ago and then has started to come down a little bit.
Okay. Now, one other thing I want to show our users is you're looking through these charts and you have no idea really what this company is. We do have this more data button on the flip charts where you can look at additional data. And over here, I can scroll over to the profile. This is a real estate finance company. So if you are analyzing flip charts and you want a little bit more information, just use that more data button up at the top.
Now, I might add that I'm kind of a little agnostic as to what sector any given stock is in, except for if I'm looking at my portfolio, I don't want to have 20 REITs, real estate investment trust, in there. I don't want to have 20 nothing but regional banks. So I am interested in the stock into what industry it is, but not when I'm picking the chart of the day. When I'm picking my portfolio, then it matters to me because I do like to have a pretty diversified portfolio. I don't want it loaded up in any one industry, so that if something happens, some black swan event happens to that industry, like the housing crisis. Boy, if I was into bank stocks and REITs during the 2007 banking crisis, wow. If I was into the travel stocks, airlines, cruise ships, and all that, right before this COVID thing hit, I'd have gotten killed. So I do want my portfolio to be diversified, but as far as the chart of the day is concerned, I'm not as interested in what industry that stock is in.
Okay.
So you might see me recommend you might see me feature 3 banks in a row, but I wouldn't have you put in your portfolio 3 banks in a row.
All right, so we've talked a little bit about your process, your daily process. You run the screener, you apply your custom view, you look for the pattern in the flip charts. I want to take everybody now to where your chart of the day newsletter is located. It's in our news tab. Right over here is chart of the day. And I mean, you'll be able to see the whole archive of Jim's chart of the day newsletters. If you are not registered to get the newsletter, you can sign up for free right over here. But Jim, let's take a look at, you picked this one yesterday, Ingalls Market. You want to tell us a little bit about what you can expect if you sign up for this newsletter?
Okay, what I look for is what is the single stock that shows me the best momentum, not only over the last 6 months, but is currently showing me the best momentum. And again, you may see 3 banks in a row or something like that. I'm not saying that this was the best stock of the day, but it was, if I looked and I'd already recommended a stock within the last 90 days, I'm not going to look at it again and put it on the chart of the day. Now, what I did was, again, this Ingalls, I used my screening tools, and if you go down to the data at the bottom, you can see that what happened was it's got the highest 100% technical buy signals. It's got 112.52 weighted alpha. And look at down there, it's hit 14 new highs in the last month. And it has my trend spotter buy signal. So the three things that I had in my screener, you can see that that stock had all three of those and had a chart that I really liked. If you can go back up to the top again. And you can see that chart. It's got, look at that steppings of new highs. And you can see that on this, the day that I recommended, it also hit a new high. So it met all the criteria that I had. It had the high weighted alpha. It had a high Barchart opinion. It had a lot of new highs in the last month, and it hit a new high during the current trading session.
All right. So one of the things that we typically get comments on, not typically, but every once in a while, somebody will write our support group and say, you know, I'm getting Jim Van Meerten's chart of the day. These are all already up here. They've already made the, you know, a brand new high, and I don't see where these stocks are going to go any higher.
Right.
Somebody just posted a question here about, have you ever back tested any of this stuff? And
okay, I'm going to make two comments about that. One is that if any of you read Investors Business Daily, they have their list being stocks hitting new highs, and they said something that's kind of profound. A stock like an Amazon only got to where it is by hitting continually new highs over a long period of time. And so I'm looking at, is this stock still hitting new highs? Now, Gene, by any chance, do you have that screen you and I were discussing the other day?
My portfolio that I've been
taking my chart of the day and
yeah, that's where I'm going.
Well,
so
okay.
Just so everybody knows, Jim and I have been preparing for this webinar for a while, and I just thought, what the heck? I'm going to start. This is going back. This was December 1st, 2020. This was Jim's chart of the day, and I've been entering all of his chart of the day picks every single day since December 1st.
Click on that,
so this is a paper portfolio of mine.
Click on that total change, the total percentage change.
Oh, the total percentage change. Yeah. Okay.
And you can see that here's stocks that were recommended a while back and continue to hit new highs. So you can see how much 103%.
Right. This was your January 26th. You'll see the entry date there.
So what you're looking for is a portfolio of stocks that are continuing to hit new highs. And so if you limit your losses and let your winners run, then you can do that. Let's go inverse that total change. And let's hit our flip chart. And let's just look at what we would have done. Now, here's a stock that you can see that
this was the date that you featured it on chart of the day.
I featured it, and it continued to go up for a week or two and then went down. So it, again, see where the trend spotter hit? I would have been out of that stock there. So we're looking at those things. Now, I use two things. I use a stop loss. When I first buy a stock, the first stop loss I put in is 15% below what I bought it at. All right. Later on, as that price moves, I'll go to the 100-day moving average as my stop loss. A stop loss is not where I'm going to sell a stock. A stop loss says if I'm going to go 2 weeks on a sailboat to Tahiti and all Armageddon hits while I'm gone, how much pain can I take in my portfolio when I come back? And the 100-day moving average is my maximum for pain. For you, it may be the 75-day moving average, the 50, I don't know, it may be the Golden Cross. There are 3 times, again, the stop loss is not where I sell my stock. There are 3 times I'm going to sell a stock, and I'm looking at them every Friday to figure that out. One is if I have a negative rate of return. Remember, my very first stop loss is 15%. Anytime I buy a stock and I've lost more than 15% on it, I'm out of it. The other is if I have a no rate of return. If Again, if you can see here, do you see that line? It's telling me this stock isn't adding anything to my portfolio. That line is flattened out. It's not hitting any new highs. Okay, so if this bottom line, the new lows, if that was hitting new lows, I'd be out. And if it's not hitting new highs, I'm out. So remember that the stop loss is not your sell point. The stop loss is the maximum loss you could take and still not jump out of your basement window. The time you want to sell, if you have a negative rate of return, if you have no rate of return, it's not adding anything to your portfolio, it's been flat for 6 months, or if it's less than whatever your benchmark is. Now,
yeah, we're going to talk about benchmarks.
Your benchmark is,
in just a moment.
Suppose your benchmark is the S&P 500. If your stock isn't making more than the S&P 500, then why didn't you just buy the IVV S&P 500 EFT and sit there with it? So you're wanting to make sure you have that. Now, one of the benchmarks that I use is the value line index. And the reason I use the value line index as my benchmark is because it is not capital weighted. All 1,700 stocks, and the largest 1,700 stocks. So basically, it's what's in the S&P 500, the mid cap 400, and the small cap 600. It's those stocks are in that value line index, and they're not weighted in any way. Now, another tool that you can use instead of the value line index is, let's click on the stock momentum up in the left-hand corner.
Yes, I do want you to talk a little bit about this.
That. This is a similar thing to it, except instead of using the 1,700 stocks, today it's using 5,100 stocks. And what is this stock chart telling me? Today, I like to have at least a 50-50 chance of making money. All right, so if 50% of the stocks are trading above their moving average, I'm in the market. If they're not, I'm either out of the market or I'm not adding to my portfolio. So today, if you can look at it, today only 78% of the stocks are trading above their moving average. I mean, only 78 are trading below. Only 22% are trading above. Barchart again gives you a green light and a red light signal. A green light is anytime the market is trading above 50%, and the red light is when it's trading below. So if you can see, go out to the 50-day moving average for today's stock, and you can see that the 50-day moving average, 55% of all stocks are trading above the 55-day moving average. Okay, I'm not panicking at this point in the market. The more red I see across that top line, then I begin to panic. I don't jump out of the market just because it's all red. I take each one of my individual stocks. When they hit my sell point, I sell. So if that were all red across that line, that might be a day that I don't add new stocks to my portfolio because I don't have a good market direction. I want to be in a market that is going up. I don't want to be in a market that is going down because I'm retired. Capital preservation is my biggest worry. And, when you're 25 years old, you may want to be in the go-go stocks and just plow all the money you can into the market because the time frame is different for you than it is somebody like me that's 74 years old. So that's what I'm looking for. I want that green signals all across there.
Okay. So just for our audience, for reference, I'm on the stock market momentum page, and Barchart has a proprietary index. It's this market momentum index, and that's really what we're looking at here. It's an indicator that calculates the change in the overall markets.
So it's just another way that gives you the same indicator that using the value line arithmetic index is going to give you almost the same data out of it.
Okay.
Okay. Well, so, Gene, I see that we're close to the end. Is it appropriate to take some questions now?
Well, I do want to spend just a quick minute and tell our audience a little bit about your portfolios. You actually have a number of model portfolios that are available on the Barchart site for people to take a look at. And these are model portfolios that you base using the same criteria that you use your chart of the day picks with.
In a way, yes. Now, let me say that I went in yesterday and the day before, and I trimmed some stocks out. That,
okay.
But I have not added back to the positions at this time. I probably will do it later in the week, adding to it. But there's 3 different methods for the stock selection. The first is new highs. And so again, I'm using the list that we had of those hitting an all-time new high, and then going back and using it, how many are consistently hitting new highs, and then I look at my charts to see those.
Okay.
Second list, the second portfolio is. Oh, you want to go to those portfolios?
Yeah, we may as well show people
the
your
second
portfolios.
portfolio is very similar. The stocks that are picked in that portfolio, the Van Meerten Special Fund, are those similar to the chart of the day. The third one, the revenue growth fund, I use a completely different method of selecting stocks there. What I'm looking at is, in the long run, the stocks that will probably go up in the long run are those stocks that are increasing revenue. They're either increasing their market share, they're formula stocks where they're Burger King and they got 1,000 units and now they add 500 more, now they got 1,500, or they're ones like Tesla, where Tesla is growing and putting in larger and larger factories. So there are growth stocks and there's what we call formula stocks. These are the stocks that in the long run are going to grow because their revenue year over year over year keeps going up.
All right. I want to take a look at one of these, and let's take a look at the special fund. Up at the top here, you show how you pick these stocks.
Okay. Now, as you'll notice, the special fund.
We'll look at the new high fund. I'm sorry.
Okay. The new high fund. Now, if you notice that right now I've got about $224,000 worth of cash, so I'll be going back in and buying some stocks in today or tomorrow, and adding to that portfolio. Again, we're looking at the stocks. Let's do the total change.
Right, and I want to point out, you add the value line index, your benchmark index, to these paper portfolios. All right.
Okay, total this is a portfolio view, and so I'm saying, boy, that now if there ever was a COVID stock, look at that Generac. Generac makes home generators. Okay, so when all these people were worried, they were on ventilators and all that kind of stuff, when Texas hit with their snowstorms and all that kind of stuff, that stock took off like crazy. Okay, and so let's look at the custom view. And let's just sort it by weighted alpha. Now you can see where the weighted alpha is for I've got the S&P 500 in there, and I've got the S&P 500 and also the NASDAQ index and the value line. So if I was looking to replace a stock, I would say that over the last 6 months, the Laboratory Corporation of America has been performing a little bit less than the market. It's performing good, but not as good as the other stocks.
Okay.
Again, let's go to the first month and click that.
Whoops. The
first month percentage change, 1 month percentage change.
All right.
Let's inverse that. Okay. Now, Generac is a stock, like I said, it was a great stock back when. Let's look at the flip chart. You can see now Generac has probably done its what it's going to do. back 6 months ago, everybody was buying generators. It was going gangbusters. Look at that 100-day moving average. I mean, that is a straight 1-for-1 slope. And this one pretty well told you, look at where the trend spotter hit. The trend spotter is a very early indicator. And the trend spotter, no, back to the right.
Over here.
Right there where it split. You see where I've got it? It's there now telling me Generac doesn't know where it's going right now. It's got a resistance line and a support line. So it would be a hold right now. If it breaks through either that bottom line, then it's going to be all red in just a short time. So it's a stock that I'd be monitoring because it looks like Generac has run its course.
Okay.
So I hope you get a feel. You've got the data, pure math, but once you start reading the charts, you kind of get a feel for the market and you feel of what that stock is doing. Go back to that flip chart. I think you were just showing like that second one there. We're looking at one here. See, I could have gotten out of that thing too early. It came back, but then went down. But as you get to see the top line, it's not adding anything to the momentum of my portfolio. It's consolidating, but not. The longer that line gets, then the more I'm looking to sell that stock.
Okay. So back to what you do is you add a benchmark index to your portfolios and you review them and you keep on looking at those charts, you keep on looking at the patterns, and you've been rather successful with all of your other portfolios and your contests that you've entered in. So I'm hoping that everybody has been able to take a little bit out of what Jim does in his daily stock selection, and maybe
you need to have a disciplined method for looking at things. And so the first method is screen for the stock. If maybe you're a dividend investor, screen for the ones having above average dividends. If you're a growth investor, screen for the ones having the highest revenue increases. I just happen to be a momentum investor, so this isn't good for everybody, but I do encourage you to make a custom screener that will screen for the types of stocks you like, then make a custom view that will let you manipulate the data to the things that are important to you. And third, make a chart that is meaningful for you so that you can visualize it. Once you've sorted your portfolio or the stocks that you want to buy, thinking about buying into some ranking, then you can go through the charts and find that one stock that you really like or the one stock you don't like and you want to dump from your portfolio.
Great takeaways. So a few questions that we have just a few minutes for questions.
Sure.
Somebody's asking, did this stock picking work for you back when the markets were not doing so well, when we were in a bear market?
Yes, and I'll put it this way, yes and no, okay? When I combine it with looking at what the market is doing, in other words, my stocks always perform above average. But if the market is down 30% and I'm only down 20%, I don't like that either. The fact that I beat the market isn't the important thing. So, like I said, the management of the stocks, I'm on some other sites, and there's one site that I'm on where you pick a stock, but the requirement of the stock is that you hold it for 1 year, an entire year. Hell or high water, doesn't matter. And then they also allow you to manage a portfolio. So on my picking the stocks, I'm picking above 50% of the stocks, but on the actual value that I have by selling stocks when I need to get out, I had an 83% return in that portfolio. So again, you select stocks and then figure out when you want to sell. Negative rate of return, that's not good. no rate of return. It's not adding to your portfolio, and if you're less than your benchmark, because otherwise you could take that benchmark and just say, I'm going to buy the darn EFT index funds and stay there.
Okay. And just one more question here. So if you see yourself, you have a winning stock, how long do you let it run? This is a question from...
There's an old idiom on Wall Street. The trend is your friend till it isn't. Okay? Which is why I use these charts. The trend, I may hold that stock 3 years. I may hold that stock 20 days. If it drops 15% off its previous high, then I'm looking at, is it going to fit one of my 3 sell criteria that I have there? So I'm going to let the stock tell me how long I hold it. I do not use price targets because I don't know, what's going to happen. And I don't back test. And the reason I don't back test is this. You're going on the assumption that all the economic conditions that were in the past 6 months are going to continue into the next 6 months. And I can't think of a time when that's in the last 3 years. I don't think there's any 6-month period that has been like the next 6-month period. So you want to be flexible. You want stocks that are above average, but at the same time, you don't want to take a loss. So let the stock's momentum tell you when to get out.
Very good. Okay. Well, that about wraps it up for today. And I do want to let everybody know you are going to be getting an email with the link to the recording a little bit later on this afternoon. But I also want to show you, so here's where the recording is going to eventually be. And right over here, if you're looking for Jim's custom view information, his chart templates, and his screener, it's going to be right there in the webinar recording as well. So you'll be able to create a custom view, chart template, and a screener the same way that Jim does. And the other question I'm getting from people is, do you have to be a Premier member to do this? No, those 3 tools that Jim just showed us are part of a basic membership, which is free. We do have a Premier membership, which will give you even more custom views, more templates, more screening capabilities. So that,
I might add, Gene, that
go ahead.
The reason I became a Premier member, when I first started using Barchart, I was using the free site. But I very shortly became a Premium member because what I like about the Premium is it allows me to save those things.
Right.
So every time you log off, when you got the regular membership, you have to set your template up again, where if you're a Premium member, you can set up 20, 30 of these templates for either screeners, charts, or custom views, and it saves it, and you can just pop between them. So that was the big advantage for me of becoming a Premium member. It saved me a lot of time.
And one final thing, back on the webinars page, John Rowland will be back next week to talk about chart annotations, tools of the trade. So if you are a chartist and you are interested in learning more about how to add the different tools available on our interactive charts, I encourage you to sign up for next week's webinar as well. Jim, it has been wonderful to have you talking to our Barchart audience about how you go about selecting the chart of the day for our daily newsletter. I really appreciate your time today, and thank you very much for joining us. And for all of you out there, I want to thank you for using Barchart.com, and we wish you the best of all trading. Thank you again, and we'll see you next week.
Thank you very much.